Okay, and we are live. Good morning, good afternoon, good evening, good day. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. Lyonsview Realty is committed to ensuring that you have the resources, the information, and the tips to assist you in making the best financial decisions. We want to maximize your wealth building power now and in the future. So, Financial Fridays, we help you stay current on those trends, excuse me, that impact your bottom line. So you can like us on YouTube, on Facebook. We air every Friday at 9:30 a.m. Eastern Standard Time. Share, hit the like button, the subscribe button, and share this right now to those people you know who need to get this information. They need to hear this information. Share it with a friend, share it with a coworker, share it with a family member, but hit the share button because you don't want to miss what we're going to talk about today. So today we have a very, very special guest, Mr. Don Graves. Hey, Don, how you doing?
Hi, Claire. I'm doing fantastic.
Awesome, awesome. I actually met Don. Wow, it's been pre-COVID, and when I say we, the National Association of Real Estate Brokers had a workshop. We had a whole wealth building day for the community at the Kroc Center, and Mr. Graves came and did a presentation. And at that time, I had heard about the topic, but I really didn't have a lot of information. And after I heard him speak, I was like, oh my God, more people need to know what you have to say, because I think there are quite a few. For people who've heard about the topic, there are misconceptions. And for people who think they know, there's a lot that they don't know. So today we're going to get into that in a little bit more detail. But let me share a little bit more about Mr. Graves. He is an RICP, and I'll let him tell you what that is. But he's the president of the Housing Wealth Institute. He's an adjunct instructor on retirement income at the American College of Financial Services. He is considered one of the nation's leading educators on incorporating housing wealth into retirement income planning. Really awesome. Don has been quoted in Forbes magazine. He's been featured on PBS sponsored shows and recognized as one of American College's 11 retirement income alumni that you need to read about. He's a sought after professional speaker, and his workshops in helping consumers across the country to enhance their retirement plans. Welcome, 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 Don. Thank you for joining us today.
That was a heck of an introduction. Thank you so much.
Well, you've done a lot, and I think retirement income, now that I'm at that age of being in retirement, one, I think that people should think about retirement before they hit that age. And a lot of times people think, oh, I'm not 55 or I'm not 62. I don't need this information. But you really need to start planning in your 40s. Like, you need to know what's available for
Hmm.
you. You need to know how it works. So by the time you get to 55 or you get to 62, you have the information that you need to make the best financial decisions. So I'm really, really glad that you're here today,
Thank you.
um, and that you're going to share some information that I think is going to be very valuable to the folks who are going to be listening today. So thank you.
Outstanding. Thank you, Claire.
Yeah. So share a little bit about yourself, something that's not in the bio.
Well, I have an eclectic background. I started in the world of housing wealth. I was the president and CEO of an organization called Habitat for Humanity in Philadelphia, Greater Philadelphia. And before that, I served in the ministry. I lived in Africa and Russia, worked on campuses and churches throughout kind of the Pennsylvania, New Jersey, Delaware area. So that's not in the bio.
Okay. That's really, really interesting. So you are well traveled. That's awesome. And I didn't know you were a minister. So that's pretty awesome as well. Yeah. Well, thank you. Thank you. Thank you for sharing that information.
My
And
pleasure.
how did you become involved with reverse mortgages? That's kind of a It's a lot of information there.
It is a lot of information. And hold on, I want to adjust something over here real quick.
Okay,
Give me a second.
no worries. So it's Don's adjusting his screen on his side.
There we go.
You got it?
Uh-huh.
Okay.
When I was at Habitat, gosh, 26 years ago, my sister, who's 14 years older than me, called me and she said, "Little brother, I've got a business idea you may be interested in." And I said, "Tell me about it." And she described, and I said, "Oh no." I said, that's it. You're taking old people's houses, you're going to prison. I don't want anything to do with this reverse mortgage scam that you got going on.
Oh no.
And I didn't want anything to do with it. And
Wow.
then about a year later, I looked at it again and I called 5 housing counselors that did reverse mortgage counseling, got breakfast with 3 of them. And I
Nice.
said, what's the gotcha? What's the aha? What's the fine print? HUD, the United States Department of Housing and Urban Development, had a home ownership center in Philadelphia, still does, downtown Philadelphia. I went and sat and talked with them. I talked with Fannie Mae, AARP, because I wanted to know if I was going to really do this, that this was not going to hurt people. So
Indeed.
after doing all of that, I called my sister back and I said, "Tell me what the next steps are. This is a very important resource for the right type of people." So that was kind of my foray. It took me a while and it took me a lot of research before I got in because, Claire, I wanted to make sure I could look you in the eye or anyone who's watching or listening to this and say reverse mortgages are not a scam. They're not for everybody, but they're certainly not a scam.
Yeah, I remember my first introduction was before I came to New Jersey. I was living in California, and I don't think people thought it was a scam, but I think what was happening is that there were some people in the industry who they weren't scrupulous. You know, they were not giving people all of the information that
Mhm.
they needed, and so people were thinking one thing. And there were people who didn't have the best experience, and so it kind of got a bad name associated with it. And I think it's really important, which is why I'm glad you're here, one, to just explain what is a reverse mortgage, because some people don't even know
Mhm.
what it is. And also I think what's really important is how it works, what it does. And then we'll get in later what more is available, because it does a lot more than what I think people think in terms of retirement planning and different ways to do things.
Mhm.
So, what is a reverse mortgage, and how does it work?
Well, as I begin to talk, um, if I go off on a story, I want you to bring me back to the question.
My hand
A reverse mortgage is a good way to mess up a barbecue. I tell you, that's what it is.
up.
I
Okay.
mean, I mean, think of the last family gathering. Memorial Day is coming up at the time of this recording. 4th of July, Christmas, Thanksgiving. Imagine 10 people around the table. They got the collard greens and the mac and cheese and the chicken, and someone says, "I'm thinking about having Mama do a reverse mortgage."
Mhm.
You know what happens? Three
Everybody
people
goes,
get up and leave the
"Well,"
table.
yeah, they'll be like, no,
Three
no, no,
pe-
no,
three people dive under the table,
no,
and your aunt Janie made a shank out of a plastic knife and
no.
fork and
Ooh,
tried
stop.
to kill you.
Oh no.
It's dangerous to mention reverse mortgages. We hear all types of things, don't we? Let me give your viewer, your watcher, your reader 4 letters: IJAM. It's
IJ.
just a mortgage, folks. It's
Mhm.
just a mortgage.
Yeah.
Don't It started in the United States in 1961. Came under the oversight of the federal government in 1988, 36 years ago. It's not new, it's not spooky, it's not dangerous when used the right way.
Yeah.
What is it? It's just a mortgage. IJAM. Now, let me get into some particulars.
Okay.
A reverse mortgage, or to be very specific, a home equity conversion mortgage. Now, listener, watcher, reader, you may want to get a pen and paper because I'm going to give you some nuggets today, and
Yes.
I'll say write this down. All right, so take 10 seconds, grab your sheet of paper and a pencil, and I'm going to give you some stuff. So the home equity conversion mortgage, HECM, is the federal name. The nickname is reverse mortgage. The federal name is home equity conversion mortgage. So what is it? A HECM is a federally insured loan, FHA, that allows retired or senior homeowners age 62 plus to convert their home into tax-free dollars without giving up ownership, coming off title, and or having to make monthly loan payments. Let me say that again. You don't come off title. You don't give up your home. You don't have to make monthly payments. Why? IJAM. It's just a mortgage. It's just a home equity loan. Age 62 or better allows you to borrow money from your home without giving up ownership or making payments. The amount of money you get, now here's why I want you to write this down. The amount of money you get is based off of three things. Where's my piece of paper here? I'm going to draw it out for you and put it on screen. All right. It's based off, this is a triangle, all right? That's a triangle. So if you're writing down, sometimes I do this, but then I did it and someone says, oh, he's a part of the Illuminati. And I said, I better start doing my Jay-Z sign.
Or they might think you're a Delta because
Yep. Or Delta DST.
Yes.
So
which you wouldn't be eligible for, but I am actually a Delta.
Not in the old days. I don't know where the world is going, but
okay, watch out.
Watch out. So the amount of money you get is based off of three things, folks. Number one, the age, right at the top of your paper, age of the youngest spouse. The older you are, the more money you can get. Number two, the value of your home. And number three, the current interest rates. So those three things, 1, 2, and 3. Did you write that down on your triangle? 1, 2, and 3, age, value of the home, current interest rate. So based off of those things, a certain amount of money is going to be made available to you. Now, underneath the base of your triangle, underneath the base, if you have a mortgage or home equity loan or line of credit, put the minus symbol underneath because a reverse mortgage is a first mortgage. So I have to pay off whatever you owe from what's in the middle of the triangle. And then what's left over is what's called a growing line of credit, a growing line of credit, a Glock, G-L-O-C. Okay. That's not a weapon. That's not a.
Actually, it is a weapon, but
it is a different type of weapon. I should say that. Yes. So that's a reverse mortgage, a loan that allows you to borrow money from your home. You don't give up ownership, come off title. You don't have to make payments. The loan gets repaid when the last surviving borrower, mom or daddy, permanently departs the house. They move, they die, they go into some sort of facility, and they've been there more than 1 year. At that time, the reverse mortgage gets repaid. Now, Clara, what gets repaid? This is very important because here's what I hear. Oh, that's that loan where the bank loans you the money, and when you die, they take the house.
Yeah.
Right? That's what we've heard. Now,
well, I'm going to ask everybody, put in the chat, do you think that's fact or fiction? Just put in the chat, do you think that's fact or fiction? Okay, go ahead.
That's that loan where the bank loans you the money, and when mama dies, they take the house. Now, I point back to your 4 letters, IJAM. It's just a mortgage. Is that any mortgage you've ever heard of in the United States? No. So what happens at the end? 2 things I know. When mama dies, the house is going to be worth some money. Mama's going to have a loan against the house. That loan is going to be paid off typically from the proceeds from the sale of the house, and 100% of the remaining equity passes on to the heirs or the estate. Let me say it like this. Mama has a $300,000 home right now today, and she got a reverse mortgage. Maybe she took out $100,000. I don't know. Let's say $100,000. 20 years down the road, that house is no longer worth $300,000. It's doubled in value. Okay. It's now worth $600,000. Mama borrowed this money, $100,000. She didn't make payments because she was living and enjoying her retirement. So down the road, she now owes me more than what started. Let's say I'll make a big number. She owes me $300,000. So now, 20 years later, I've got a house that's worth $600,000, and Mama has a reverse mortgage balance of 300. Clara, what happens? The children sold the house for 600.
Mhm.
That paid off what?
The 300.
And what's left over?
300.
And
Yeah.
who does that go to?
The heirs of the estate.
That's correct.
Yeah.
And folks, isn't that how a regular mortgage works? If I passed away, my wife and I, today, my children would sell the home, they'd pay off what I owe the bank, and they'd pocket the difference. That's a traditional mortgage. So a reverse mortgage allows the homeowner to practice some financial strategies that we'll talk about today. And then when they pass away, the heirs get whatever is left over, just like any mortgage. So
Mhm.
it's not new, it's not dangerous, it's not spooky.
Right.
Yeah,
And if the heirs wanted to keep the home,
they
what
can
would
keep.
they? Mhm.
They would refinance. Well, the heirs can keep the home because Mama had other assets, and they
Mhm.
use those other assets to pay off the mortgage. Or maybe
Mhm.
there's life insurance. Or maybe
Mhm.
they simply say, Don, I've got a $600,000 home, and I'm going to refinance it
Mhm.
and pay off the 300,000, and we're going to keep the home. You
Mhm.
can certainly do that. Now, in my 25 years, I've had 16,000 conversations, and about 3,000 people became my clients. And that tells you two things. Number one, I've talked to a lot of people. And number two, I know this program is not the right resource for everybody. But here's the truth of the matter. Less than 2% of heirs are going to move in and keep mom and daddy's house.
Right.
And so it can happen. It just seldom does. They
Yeah.
typically sell it, particularly if there's more than one child. They sell it, pay what's owed, and pocket the difference.
Yeah. And the only reason why I bring it up is
Mhm.
because a lot of people, the other fiction that's out there is people's like, oh, the house goes back to the bank,
Mhm.
or we won't be able to keep the house in the family if that's what the family wanted to do.
Mhm.
And I
Mhm.
think you presented some good options of ways that they could keep the house if they wanted to keep the house, or set it up if the parents wanted the house to stay in the family,
Mhm.
set it up so that the the money is there to be able to do that.
Yeah.
So again, that's another factor fiction. The
Yep.
house does the house go back to the bank after the owner, mom or dad, passes away? The
No.
answer is no. Yeah, that's not a fact. Um,
That, can
the other
I?
question that came up is if you said husband and wife, but let's say husband and wife, mom and dad are living in the house.
Mhm.
One of the husband or wife passes, and the other spouse is not of age. Do
Mhm.
they have to move out of the house? That was another concern that came up for people. Question.
Okay.
Mhm.
I'm going to answer that, but I want to go back
Okay.
because a lot of times the children will say to me or say to their parents, um, that's not going to leave us anything. Or someone will say, every time I do this,
Mhm.
well, I know someone that the children got nothing
Mhm.
and the mom and dad lost the house. What do you say about that, Don? Or I know someone who lost their house to a reverse mortgage. So let me address that because that's a lot of concern that people have. That's a lot of, and I understand that concern.
Mhm.
So here's what happens. Again, back to the barbecue. Memorial Day, you over at your cousin Tracy's house, and Uncle Jumba comes out of her spare bedroom right at the middle of the barbecue. And someone says, Uncle Jumba, are you living in Tracy's spare bedroom? He said, Yep, I live here now. And
Mhm.
they say to him, Well, what happened? You had your own house. Now,
Mhm.
here's what he says, Claire. Listen, audience, I got a reverse mortgage and I lost my house. And when he says that, what does everyone at the barbecue do? Oh my gosh, I knew it. I knew it. I knew it. And before you know it, Sunday they go to the Baptist church and they go to the deacons meeting early and they say, we got to make an announcement on Sunday. And the deacons say reverse mortgages are terrible. And Monday it's at the barber shop, and Tuesday at the beauty salon, and Wednesday at the nail parlor. And by the end of the week, someone knew someone who knew someone who knew someone who had an uncle, got a reverse mortgage and lost his house. And they come to Claire, they come to me and say, Don, what do you say about that? And I say, It's absolutely true. Oh my gosh. I said it's absolutely true. Yeah, Uncle Juba got a reverse mortgage and he lost his house. But he
Question is
did.
why?
The question is why. Now, there are four. Listen, folks, you may want to write this down. There are four, when you get a reverse mortgage, four requirements once you get it. You ready? These are pretty spooky, pretty dangerous. Number one, at least one spouse has to live in the house. Number two, you've got to take care of it. Number three, you have to keep homeowners insurance in force. And number four, you have to pay your property taxes.
That one.
Now, what do you think Uncle Junebug didn't tell the people at the barbecue?
Either he didn't pay the taxes or he wasn't the owner of the property. He's just living in the house, but it's not his house.
He didn't pay the taxes.
He
For
didn't pay the
four, for
taxes.
4 years, he hadn't paid the taxes. Folks, unless you're a homesteader in Wyoming, if you don't pay your property taxes in Philadelphia, Willingboro, New York City, Cincinnati, Ohio,
Right.
you're going to face a tax lien sale, a sheriff's sale, but you're going to lose your property if you don't pay your property. That has nothing to do with the reverse mortgage.
Right.
And there was I said that one time. I said, no one's lost their house because of reverse mortgage.
Right.
Philadelphia City Council jumped up. It was at a NARAB meeting in Philadelphia. He jumped up and he says, that's not true. Every week we got people coming in here who are losing their homes because of reverse mortgage. And I said, not true. I said, those people didn't pay their taxes and the city of Philadelphia is taking action against them. And we fussed. I said, you go check it out and you call me with an apology. Well, he called me a few days later and apologized. Yeah. He said every one of those people hadn't paid their taxes in years. And the city had taken action. So you hit the story about Uncle Junebug. Yeah, he got a reverse mortgage. He lost his house, but it wasn't because of the reverse mortgage.
Yeah.
So anyways.
Oh, I was going to say that's really, really important. They have to pay their taxes and their insurance. And I think a lot of times people hear, oh, I don't have a mortgage payment. So they think they don't have to do anything. But no, you have to pay your taxes and you have to pay the insurance on the property every year on time.
And so when a child comes up to me, they call in and my mama and my grandfather got a reverse mortgage and there was nothing left. And I asked them a few questions. One, I'm sorry to hear that. I'm sorry to hear that. So I asked them a few questions. And if you're listening and you're one of those folks, I know someone, I had a family, usually someone knows somebody that their mom got a reverse mortgage and then didn't leave them anything. And I say four questions I asked. My first question is, why did mom and daddy get the reverse mortgage to begin with? I don't know. Okay. No. Question number two. What did they do with the money? Oh, gee, I don't know. Third question. How come they didn't tell their daughter or their son or their family members? Wow. I don't know. Fourth question. Could the family had come up with whatever the financial need they had? Could the family have gotten together and solved that for mom and dad over 10, 15, 20 years? Gee, I don't know. I said, right. You don't know any of those questions or answers. And I don't say it in a disparaging way, but when people get a reverse mortgage, they got it for a purpose. What was it? They used the money to do something. What was it? How come they didn't talk to you first? And if they did, were you willing to pay off their existing mortgage of $200,000, or what they had a payment of $1,200 a month? Were you willing to cut a check for $1,200 a month for the next 12 and a half years? Well, clearly mom and daddy, probably because of pride and dignity, didn't want to ask you to do that. And maybe you couldn't have done that in a consistent way. Now, that's what I say to heirs. How come I didn't get any money out of mom and daddy's house? I don't know. I can assume this, that by the time mom and daddy died, remember earlier, I said they had a house that was for $600,000 and their loan balance was $300,000. Well, what happens if mom and daddy died and their house was only worth 200,000,
Mhm.
but they owed 300,000?
Mhm.
Reverse mortgages are non-recourse loans, which means the lender doesn't come after other assets. They don't come after the heirs or the estate. The only recourse they have is the net proceeds from the sale of the house. So if they only got 200,000, that was used in totality to pay off the 300,000. That's the only incident where that happened. So if
Mhm.
you don't know the story of the family that had a reverse mortgage or your family, you may not have all the information. It's still sad, but you may not have all the information. Okay, now I wanted to say that because that comes up early. That comes
Mhm.
up early. So go
Mhm.
back to your question.
Um,
You
Thank you
said,
for saying that. I just want to put a pin in that because it's important um, to really have all of the information. And
Mhm.
for people out there who are listening, Mr. Graves is an excellent consultant, and we'll do a consultant. We'll get to that at the end, but time is moving, so I just want to put a pin in that right then. My
Okay.
question was, if the husband and wife, let's say the wife is 55. I'm not. Let's
Mhm.
say they're a cougar. She,
Okay. All
she's
right.
62 and he's 55.
There you go.
And she passes, or let's say he's 50. She's a
Okay.
real cougar.
There she
He's
is.
50. So
Mhm.
um, he's not 55 yet and he's not 62, but they were living in the house together. But she passes. Now, does that take it out of the reverse state, or what happens in that situation?
Okay. So let's say we have a 65-year-old female
Hmm.
and a 55-year-old male,
Hmm.
and they'd like to get a reverse mortgage.
Hmm.
A reverse mortgage is a federally insured loan for those age 62 or better.
Okay.
So what happens, Don, when we have a 65-year-old and a 55-year-old? That's a
Hmm.
great question, Clara. Let me give you the history. In my 25 years, when I started, if you wanted to get a reverse mortgage, the 55-year-old would have to come off title.
Okay.
And then you could do the reverse mortgage on the 65-year-old. Now,
Hmm.
when that person died 10, 15 years later,
Hmm.
the younger spouse could either try to refinance and get their own reverse mortgage, or they'd have to sell the property and move.
Hmm.
That's that's iteration number one.
Hmm.
Well, there were some displaced spouses, and they teamed up with AARP and they sued HUD, the United States Department of Housing and Urban Development,
Hmm.
over this non-borrowing spouse. So HUD says, okay, um, if you're 65 and 55, second iteration, you cannot get a reverse mortgage. If you're married, you
Hmm.
cannot, because we're not going to remove the spouse from title.
Hmm.
Well, people were up in arms about that. Wait a minute, we need it. We want to have it as a strategy. So the third, final, and current iteration of this says if you've got a 65-year-old and a 55, yes, you can get a reverse mortgage. It's
Okay.
going to be based on the age of the 55-year-old, the amount of money you get.
Hmm.
If the older one predeceases the 55-year-old, they do not have to leave the house.
Okay.
They can remain in that house as long as they want. The
Hmm.
reverse mortgage, if they had a line of credit and it was growing, that goes away. They no longer have access to that, but
Hmm.
they're not displaced from the house. They can continue to remain in the home.
Gotcha. Gotcha. And they still do they have the payment, or they don't have the mortgage payment?
And what do you mean the mortgage payment?
So the 65-year-old partner is now
Uh-huh.
deceased. The
Hmm.
55-year-old partner is still in the property. Do they
Hmm.
have a mortgage payment or not?
Nope. The reverse mortgage has
It's still,
no
still intact.
monthly mortgage payment. That remains the same.
Okay,
So
so the
so
reverse
do the
stays
qual.
intact.
Uh-huh.
Mhm.
Now the spouse that's remaining has to stay in the property, take care of
Mhm.
it, pay their taxes, and keep
Right.
insurance in force. That they have to keep doing that.
Right. One other question. In the current law, so both spouses can swing in the property. Do they use the income of both spouses?
When qualifying,
Correct.
not necessarily,
Okay.
and so it all depends how it's set up. There are different iterations of that.
Gotcha.
Income is traditionally not a factor
It's
in
just
the
the
reverse
equity.
mortgage.
Yeah, more the equity. Okay. Okay. Just a question because I had a client who um, was having this conversation with them. They were selling their home, purchasing another home out of state,
Hmm.
and the wife was younger than her husband. And her concern was that if something happened to him, that she would get put out of their marital home. And
Hmm.
that's no longer the case anymore.
That's right. She would not if she was if she's on the reverse mortgage,
Mhm.
and no, she wouldn't get put out.
Gotcha. So, what are the benefits of doing a reverse? You pointed to some of them, but let's like hit them.
Excuse me.
Hmm.
When people think of reverse mortgage, some people think, oh, that's the poor, destitute widow rubbing two nickels together to start a fire that she can eat her last meal and then die.
Hmm.
And that's not really the case. In my 25 years, listen, folks, reverse mortgages are about retirement. You may want to write that down. They're about retirement. What is it about retirement? Retirement is going to last longer than most of us expect. It's going to be more expensive than most of us imagine, and
Yeah.
it's going to be unpredictable.
Mhm.
So if I say to you, do you have enough retirement to enjoy the kind of lifestyle you desire, or do you have some concerns?
Mhm.
Most people say, I have a concern. To the person who says, Don, I'll be okay. Well, thank you, Bill Gates, Warren Buffett, Oprah Winfrey, Elon Musk. You probably will. But for the average person, and a fella said to me, Donna, I'm pretty sure I'll be okay. I've got $800,000 and I've got this, that, and the third. And I said, you may be. And then I asked folks who say that, I said, where were you on 2/2/20, February 2nd, 2020?
Mhm.
And they say, well, I don't know. I said, it was a Sunday. Does that help? I said, Don, it doesn't. I said,
Mhm.
well, I was across the street later that evening watching the Super Bowl at my neighbor's house. And at halftime, Claire, I'm going to go out and get a few snacks up here at the Walgreens. Now, as
Mhm.
I'm going out to get snacks at halftime, not a single person, not one person said to me, and while you're out, you may want to get 300 rolls of toilet paper because in 6 weeks, the world is going to be very different. Nobody
Mhm.
said that to me, not a single person. Because if they had, I would have said to them, what do you think's going to happen in 6 weeks that I would need 300 rolls of toilet paper? Well, I
Mhm.
tell you what happened. By March 17th, 2020, COVID restrictions were in place. My
Mhm.
grandchildren's daycare shut down, and so my house was the daycare. My
Mhm.
son's dormitory shut down, so he's back home with me, and my wife is at Costco fighting for toilet paper. So when I say that retirement is going to be longer than you expect, more expensive than you imagined, and unpredictable, do you have enough resources to navigate that? I think an honest question for the average, honest response for the average person would be, I'm not sure. That's fair. So if I say to them, if I gave you an additional asset to help you navigate this long, uncertain, and unpredictable retirement, would that be okay? I think most people would say, yes, that would be okay. So
Mhm.
I want to share something. I may share my screen right
Okay.
now.
Okay. Let's see.
So, reverse mortgages are about retirement. Go ahead, Claire, if you can share that.
Yeah, I'm hitting it. It's being finicky. Oh, here we go. There we go. There
All
it
right.
is.
Now, listen, on the screen, folks, we've got, remember the triangle age, value of the home, Interest rate gives you the net benefit amount. So I want to put up some numbers here. As we look at a reverse mortgage, there's some numbers on the screen. Let me go back. So on the left-hand side, let's take a $600,000 home. And a person's age 65. This is ballpark. It's very conservative. Well, they get around $200,000 in a reverse mortgage. If they're 75, they get a little bit more money. But now I want to talk about kind of what that does and why that's important to you. I won't go through these people. It was a good presentation, but I will go through this. You never give up or come off title. You never owe more money than the home's value. You never have to leave the home if you spent all the money. You never have to make loan repayments in advance of leaving the home. Those are the four nevers. It's just a mortgage. Now, this line of credit, a reverse mortgage, is about retirement. And now I want you to take a look at this. Let's look at a person in a $600,000 home at the age of 65. I don't have my annotation tool, but you could see out 178,800. That's their reverse mortgage. They set it up, but they didn't use it. So 20 years later, look where it is, Claire. It's $778,000. It started at 178. Now it's at 778. What does that mean? That a reverse mortgage, the line of credit is a growing line of credit. Let's go back on full screen.
Okay.
So what does that mean? I hope you all got that. I hope you took that. So I said reverse mortgages are about retirement, lasting longer, more expensive, less predictable. Clara, most people have three kind of buckets to draw from in retirement. Where's my thing at? Here we go. They write this down, folks. You can draw three buckets. Just draw. Do I have my bucket? I don't have my bucket. Your first bucket is your income bucket. If you're a retiree, Social Security, pension, if you're lucky, and maybe you're still working, employment. That's your income bucket. Your second bucket is your investment bucket. IRA, 401ks, mutual funds, checking and savings account, money under the mattress, a business you might sell down the road. That's your investment bucket. And your third bucket is what I call your insurance bucket. Fixed and variable annuities, whole and term life insurance, disability insurance, and long-term care insurance. Now, what happens? Clara, things come up in retirement. Emergencies, expenses, enjoyment. I just want to go somewhere, take my grandkids to Six Flags. That's going to be $1,000, right? Things are just more expensive than they used to be. So when these things come up in retirement, which bucket do you draw from? Do you draw from your income, your investment, your insurance? Now put that screen back up, Claire, please. Or here's your fourth bucket, folks, right here. This is your reverse mortgage bucket. You now have the opportunity, if you do it under wise guidance, that's what we do, to say, in addition to what I have, I've got this other bucket. So I say to folks, what if you had $800,000 in accessible home equity that you could draw from for emergencies, expenses, or enjoyment? Would that be a valuable conversation to have? What if you needed long-term care? Or what? My mom's 91. We began to spend $7,000 a month for her care. She didn't have a home, but if she did, what if we were able to use that to support her long-term care goals? What if your husband dies or your spouse dies and your income is reduced? If you had another bucket of money to what you had, now you've got some options, some flexibility, right? So the reverse mortgage is growing. The line of credit's non-cancelable once you set it up. You don't have to make payments. It's insured by the government. It's not taxable. It's not tied to your home's value. So I asked people this question, Clara, and you shut me up. Now, just jump in. Now, I asked people, a lady said to me, well, Don, I've got equity in my property. And I said, can that equity buy you a hamburger? She said, no. Can it pay a bill? She said, no. I said, well, that's good that you have it, but what good is it when you need it? And she said, well, I can always get a home equity line of credit. I went to the Wells Fargo, the nation's #2 largest bank, and they stopped doing home equity lines of credit after COVID, and they're still not doing them. So I said to her, nope, you cannot always go and get money out of your house. So my question is to the listener, to the viewer who's a retiree, if you had a choice, would you rather your home's equity be liquid or locked? Would you rather it be growing or stagnant? Would you rather it be cancelable or non-cancelable? If you took money out, would you rather you had to make a payment or it was a voluntary payment? Would you rather it be government insured or non-insured? You see, that's what the modern reverse mortgage does. It gives you some option to begin to develop and create a retirement that's going to be one. Remember, I'm saying it again: longer than you imagine, more expensive, and less predictable. Having this fourth bucket could make a lot of sense for you. All right, let's go back. I'm done with that.
I think it's I'm gonna put a pin in it because I don't think people may not understand it. So I want to restate it again because most people look at a reverse as, okay, I have a home, I don't have to make a mortgage payment, and that's it. But there's this other component that you're speaking to, which is as the house value grows or the equity position in that property grows. I'll say it that way.
Right. It's not the house value. Once we set it up.
Right. It's the equity position.
Okay.
The equity position in that home grows. Not only can they can actually utilize that equity and still not have a payment.
Absolutely.
Yeah. And I don't think people realize that. Like that is huge. I have a client now who owns their home free and clear. There is an opportunity for an investment that they wanted to invest in. And they said they were going to the bank. And I said, well, what are you going to do at the bank? They were either going to refi their home, which is going to put a mortgage on their house, or they were going to do an equity line of credit. And I said, I want you to talk to Mr. Graves because there's a possibility you have sufficient equity in your house. You have the age that you can get the money that you need for this investment that you want to do and not have a payment on it. Or if you want to make that payment, you can, but you don't have to. Like, wouldn't you want to like at least consider that? And I don't think people think it's, it's spooky. Right. Like, how is that possible? And, shout out to the government because people pay their mortgages over time for 30 years. And a lot of people have paid their homes off. And the government is saying, you're older now. We're going to give, this is a blessing to you. This is something that we're providing. And people are not taking advantage of it because I think they don't understand all the things that it could potentially do and how it's a benefit to them. And It's not scary. If as Mr. Graves is saying, you do the things that you're supposed to do, which is pay your taxes and insurance, and keep the house together, and you're living in it, right?
That's right. And the big one is pay your taxes.
Pay your taxes. Yes.
I put something on the screen, Clara, that is for those watching. I've got a full master class. Go back. I'm going to go to.
Okay.
Go back to it's right under my name, should be there, reversemortgagemasterclass.com. So for those watching, you say, Don, I'd like to just go step by step. Just go there. There's a video I created, www.reversemortgagemasterclass.com. And I'm going to teach this to you step by step, piece by piece. It's about 47 minutes long, but you're going to enjoy it. I encourage you to go over there. Now, Clara, we've covered some misconceptions, and I want to make sure we get to some applications here. But there was I don't know if it's going to play or not. I hope so. But a lot of people, the animation, Family Guy comes on Fox.
Mhm.
And it's hilarious. I never watched it, but someone sent me. They did a whole episode on reverse mortgages. Put that on the screen, please.
Okay.
And I want to see, to the listener, now that you have heard some things, I want to see if you can spot in 90 seconds some of the mythology in here. Well, Peter Griffin is the father in Family Guy, and he goes to the flea market in this episode. He wants to buy Mr. Potato Head, and it's $600. And his wife says, "You're not going to spend $600 on a Mr. Potato Head." And that's where the episode picks up. Let me see if this plays for you.
I just can't hear the volume.
Okay. And with that, I don't know how to fix, but it's hilarious. Listen to your, put me back on full screen.
Okay.
Uh, but it goes into his deception, how he doesn't tell his wife, and how he uses the reverse mortgage for something simple and stupid to buy Mr. Potato Head. And oh, it's hilarious. And I show that because I say, aren't you glad you now know the truth? I want to talk about whatever you want to talk about, but some strategic uses of reverse mortgages. Put my
Mhm.
screen up, and we won't go through all of them, but I just want to, because in the master class, I talk about um, it's just a mortgage, it's more than a television commercial, and it's not a last resort. So on your screen, some strategic uses of the reverse mortgage is to reduce some common retirement risk. There's the risk that inflation is going to erode your nest egg, the risk that you'll live too long, the risk that your returns are not going to keep up with what you need. There's a long term care risk. Manage mortgage payments. I'm going to cover that one. Preserve your assets from premature erosion. I actually show people that have retirement savings how they can leave 4 times as much money to their children doing a reverse mortgage. Create a long term care plan and add new dollars by right sizing. I want to make sure we get to the right sizing. But let me start here with just I'm going to go here to
And
eliminating.
we have about 5 minutes.
All
So
right, then
we'll do that.
take me off screen.
Okay. Yeah. And what I want to say, because there's so much information. I just want to Donna's put the information about his master class. Definitely do the master class. Um, we're going to be doing an in-person workshop. So go to my website. The information will be there on June the 10th. Well, Don will be in person and he'll be going through the entire presentation, and
Yes,
he'll
I
also
will.
be available for questions and answers. So definitely come out for that. But go ahead, because I know we're not going to get through all
Well,
of it.
we're not going to get there.
Yeah.
Let me say this.
Okay.
Um, most of my clients did not need a reverse mortgage. I don't need to take a shower. I don't need to go see a dentist. I don't need a yearly physical. I don't need air conditioning. In Arizona, I didn't grow up with air conditioning. But certain things you want, but you may not need them.
Mm.
This really is designed for folks that say, Don, I'm looking at my retirement. It's going to be more expensive, last longer, and be less predictable. I want to use all my available assets. Write that down, folks. AAA, all my available assets. And if I can take now down in Kentucky, can you see this right here? Can you?
Yes.
Now we used to call this a spigot down in
Spigot. Yeah.
down in Kentucky, and it went on the outside of the house. And
Mhm.
but I tell folks, you know where the money is? The money is in the walls. I'm going to
Mhm.
put this on the inside of your house, right in the kitchen, underneath the light switch in the kitchen. And then when people come to your house, they say, "Hey, Claire, you got a faucet, you got a spigot. That's dangerous." She said, "Oh no, that's different." And you know what? As they begin to turn that thing, instead of water coming out, you know what came out, folks? Money.
Mm.
because the money is in the walls.
Mm. All
and
right. I love
and,
that. That's
and
like,
all we're doing is saying you can't get it out the walls.
mm,
I can get it out, and I'm going to give you this. I'm going to show you. Now you may want to say, Don, I'm not going to use it. You don't have to use it. But if there was money in the walls in your house and someone said, would you at least like to know
how to
how
get
to
it.
get it out?
Yes.
I think most reasonable people would say, I'd
Yes.
like to know. That's it.
Absolutely.
I'm going to end right there.
Oh, this has been really, really amazing. Really, really amazing. And if you were listening intently and writing things down, the reverse mortgage is not a scary thing. If you think it's a scary thing, listen to Don's masterclass. Say it out loud for the people who are listening. They can't see you. Um,
www.reversemortgagemasterclass.com.
okay,
Reversemortgagemasterclass.com.
awesome. So you can go to that link and hear the presentation in its entirety. You can also be able to schedule a consultation with Mr. Graves
Mhm.
to discuss your particular information, because as he said earlier, it may not be for everybody, but he can give you the information to so that you can make a decision if it's something that would work for you. It's a great, great retirement plan. It does a lot more that we didn't have an opportunity to get into today. Um,
Mhm.
this in this broadcast, but really, really listen to the workshop, do your consultation with Mr. Graves. And again, it doesn't matter if you're not 62 yet. Planning is so important to having a great future. You know, planning
Yeah.
is so great to having a great future. So get the information. And if you are 62 and you want a consultation, a great opportunity to do that as well. So I want to thank you, Dawn, for coming on today. Um, Here at Financial Fridays, we want people to have the resources, the information, and the tips so
Yeah.
that they can make the best financial decisions, and that they can increase their wealth building power, not just now, but also in the future. And I think what you are providing with this product does absolutely that. And the information, making this information to as many people as possible so
Mhm.
that people can maximize their wealth building power is very, very important. Um,
Well, to anyone who watches the masterclass, reversemortgagemasterclass.com, and schedules a discovery consultation with me, I'll make sure you get a copy of my second book, The Retiree's Guide to Housing Wealth, at no charge. So if you go to Reverse Mortgage Masterclass, watch it, and you schedule a discovery call with me. That's short. That's 5-10 minutes. I'll send you the resource. Um, at no charge.
Oh, that's awesome. And how do people get in contact with you other than the master class? What's the best way?
Sure. You can email me at askdongraves.com. Askdongraves at gmail.com. Askdongraves at gmail.com. I'll put it here on the screen here
Okay, great,
for you.
great. So that's askdongraves@gmail.com. So you can
Hmm.
reach out to him via email. You can go to the master class and get the information. And in the class, it'll give you information on how to schedule the consultation.
Hmm.
Um, and if you know anyone who needs to hear this information, please share it with friends, family, coworkers, and enemies. And people are always asking me, "What is a Lions View lifestyle, Clara?" And I say it's when you actualize your dreams into reality, when the possibility of what's available, when your life is in order, when your finances are in order, when your health is in order, when your spiritual mindset is in order, you are living a Lion's View lifestyle. You can look out over the kingdom and the legacy that you've created for yourself and be in a place, in a position not only to bless yourself and your family, but also to bless others. So I'm glad that you tuned in today. I'm really sure that you have received something of value. Share this value with someone else. Join us again next Friday at 9:30 a.m. Eastern Standard Time on Facebook and or YouTube. But if you can't join in live, catch the replay anytime. And most definitely keep living your best life. My name is Clara Lyons-DeVaughn. I want to thank you, Mr. Graves, for joining us for this broadcast, and be blessed as you move forward through your day.
Thank you so much.
Thank you.